Hi traders and welcome to Technical Analysis Market Watch on Friday the 31st of January. So I've seen a very volatile week this week with the indices and some of the currencies playing havoc, but a lot of it has recovered. So we'll jump straight into the markets and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that we've obviously had a pretty weak sort of move this week off the 50 moving average from last Friday, and it effectively came all the way back down to that 62.15, very, very close to that 62 level we know is relatively strong. It's a pretty well, it's not... we know this from back here, all the way back from the 22nd of October 22, actually, a long time ago now. When you look at it in the context, you can go back even further and you'll see support there again. But as you can see, here is a very, very heavy level of support. So I'm not really surprised that it's trying to actually hover above it. We would be in trouble if we broke down lower. And I think that for the Aussie USD. So I think we're probably going to find reasonable support at this point. But again, every move up is being met with resistance, and that's what's going to happen when you've had a pretty solid move all the way down with pullbacks basically every 100 points. You're going to find those to be resistance every time it moves up. So it could be a bit of a long struggle to actually get moving, but what it has done, it's given us a higher high, higher low sequence. So technically speaking, from a technical standpoint, we have got a higher high, higher low sequence on the Aussie, but it wouldn't want to go any lower than 62. Okay, so 62 is the line in the sand. As long as it's trading above there, we can look for opportunities to go long from the smaller time frames. Any sequence of higher highs and higher lows on anything below a daily time frame would give us an opportunity to go up, and the first target will be the previous high here at 63.30. That would be the target. I would wait for it to break the 20 moving average on this at the 62.50, which is where it currently is at the moment, before I'd get excited about a long move up to this level. But that's what we're really waiting for. We don't want it to break under 62. If it does that, in the first instance, I'd be trading down to 61.50, only scalping, obviously. But if it breaks that, then it starts to get into some serious trouble. I'd be surprised if it did. I think this level is probably going to hold. So yeah, I'd be waiting for higher high, higher low sequences above the 20 moving average on a smaller time frame, and then start looking for the previous high at around 63.30. And then after that, we're going to start moving to all of these points that caused us grief on the way down. They're the ones that are going to be the targets on the way up. So pretty good trading on the Aussie, but you just have to effectively set your targets around those key zones and look for take profits at that area. All right, over to the US dollar CAD. Nothing has really changed this week. We've had a little bit of movement up, but it has maintained its level above the 20 moving average, which is obviously vitally important for something hanging on at a particular level. It's been obviously going sideways for the best part of a month now, a little bit longer. And you can see we've got a very, very tight range, really. 143 and the 144, sort of 60-ish, has maintained all of the trading levels up until now. Again, even though it has gone up this week, it's been a bit of a struggle. Every candle has struggled to actually move forward. We had an attempted break there on in the previous session, but as you can see, it pulled back pretty quickly. But look, while it's hanging above the 20 moving average, you've got to give it the benefit of the doubt. I guess that's probably the key theme for this one. While it's above the 20 moving average, we basically maintain scalping opportunities to the highs. If we get daily closes, it wouldn't be even about the 20 moving average. It's really more about that level at 143. If we get a daily close below 143, then I think it opens itself up down to about a move to around that sort of 141. So there's a couple of 100 points there, but it's got a bit of work to do before it does that. So I'd be setting my targets at 143 there. That would be my go-to zone. I'll pop a horizontal line there. That is the level that I would say if a daily closes below that, I would be looking at the shorts. But until then, I would be maintaining scalping opportunities between these two zones down to the 143 and up to the 144. Probably 50 would be the safe option there on the high. If you do that and set that zone, you can trade it until it eventually breaks. We don't really know how long it can go sideways for. They can surprise you, markets, at how long they can stay in a particular range, but that's all it's doing really. So play inside that zone until we get a daily close either above or below, and then we can look for a bigger move after that. All right, over to the US dollar yen. And once again, it's been an interesting week. Maintain trading underneath the 20 moving average, which we know is important. And now we have got a sequence of lower highs and lower lows. Look, It's not the prettiest of sequences, but it is there. But it is, again, finding support at around that sort of 153.80 to 153.50 area. It's a pretty strong level because it's a recent roll reversal. So you've got, resistance right through there and support here for was nearly a week of interaction. So it's not really surprising that it's bouncing off this level, but the 20 moving average is bearing down on it and pushing it lower and lower again. For me, it's a pretty straightforward trade. If you're trading the daily above the 20 moving average, so which is currently at 155.80, if you get a daily close above there, I'd be looking at pushing back up to the highs of about 158.50. But if we get a daily close below 153.50, then we're going to target the next zone, which is around that 151. So this is the line in the sand moment for this one, around the 153.50. If it maintains this level above there and you want to scalp it, I'd be keeping in between the two zones of the horizontal line that we have here at the 153.50 area and the 20 moving average. So it seems to be bearing down on it and pushing it down. They're the opportunities to scalp. So I'd be keeping my scalps inside those two zones for now until we get a daily close out of that range. And that would make the yen sort of break out of this little mini trend. And then we can start going to a bigger trend down to either 151 or back up to 158. All right, dollar index. And look, the dollar index has been a very interesting week in terms of no action really at all. It reacted to the news at the start of the week like everything did in the world markets. But as you can see, all we've had is doji candles effectively for the last 3 days, and it is trapped inside a zone. It is hanging on for dear life at around the sort of 1780 area as well, trapped in a very, very tight zone. But as you can see, the trading is almost non-existent in this area. So it's one to really watch. It's a bit the same, that it's trapped inside a zone. We're in earnings season, obviously, still. So there's still a little bit to play out over the next 2 weeks, or even, I think there's some even go past that. But until we're trading above the 20 moving average on 108.30 for the way up, or below the 107 flat area with a daily candle, I'm not really interested in trading the dollar index. And of course, the euro is the one that we're really focusing on when we're looking at that. You can see that we've actually got a little bit of price action, very similar to what the dollar index has done, as you would expect, but we had a little bit more of a fall from that high. But now we have got a sequence of higher highs and higher lows, and it is trying to break out of this zone. So in my mind, this is an inverse head and shoulders. You got the shoulder, head, shoulder, and the head being a morning star, and it's testing the neckline now, and the 20 moving average is helping bolster that neckline up. So for me, although it hasn't done it yet, I think a close above that 104.50 would see a reasonable move out of this level, probably up to around that sort of 105.80 to 106. Not a bad trade for it. It's possible that it might find a little bit more strength, even more so than that, but that would be what I'd be aiming for in the first instance. But I'd be waiting for it to close above the 104.50 first with a daily candle. If we get that, then I think we've got enough momentum to actually push up. The first test would be the 105.30. That could be a good scalp if you're looking for just a quick, short and sharp entry into the market. But a break above there, and I think the 106 is probably going to be the target for it. Good trading on the euro coming up, I think. I think it's set up nicely for a move up. But if it does fail and the daily closes below the 20 moving average, then I would be starting to target the 102.80. But that's not really the preferred trade. I think at this moment, it looks like it's more biased to the long. And I would be waiting for that break. But again, it's one of those ones where you have to actually let the market do its thing and let price action dictate the way for this one, because it's pretty important that we get that break above this level here before we start to actually push on to the new highs, because it is still a little bit trapped with two doji candles, as we're all not really surprised by that. All right. S&P 500, and look, obviously a very, very big week for it with the news out of China. But look, it's recovered basically all of its losses for the week. It struggled to maintain a level higher than where it actually dropped. So it's not exactly at its all-time highs yet, but it's still pushing up there. And if you look, the day on the Monday actually recovered nearly the 3/4 of the sell anyway, and the last 2 days have been a little bit mixed. So I think it's still really churning over earnings and information coming out of all sorts of sources. We've got information coming out of everywhere. We had the FOMC this week. There's a lot going on, but really for mine, all-time highs are still probably the target. 6,100 is probably the short-term target for that. A gap is not really a resistance point. So we know we've got about 30 points. It's all sort of scalping really at this point. We're not looking for big moves. There's 30 or 40 points up for grabs. If we get a close above this little mini resistance point that's formed now this week, above that one sort of 60, 70 area, then I'd be looking for a 30, 40 point move up to the highs. Again, it's only a 0.5% move. It's not a big deal, but it's still there. So it's what the momentum is trying to tell us to do. If it fails, I wouldn't look at shorting this unless it was actually trading under the moving average. So for mine, if the daily didn't close under 6,000, I wouldn't actually look at shorting it. I'd be probably still maintaining the strength because this week has been a relatively strong week considering what happened on Monday. Okay, so pretty good trading on the S&P 500 if we do get above here and break to a new high, because I think there is a fair bit of strength and built up momentum trying to push it up, but we are dependent on earnings results, of course, and really got to let price action dictate the way. So try to scalp inside the little mini zones is probably the advice for the week. We've seen a lot of mini zones and all the things we've covered today. Try and stick inside those zones and wait for the bigger breaks before we start getting a little bit ambitious. All right, everyone, thank you for joining us this week. It's been a really good week for moves and trading. Hopefully, you're able to capture some of those scalps, and the key levels certainly held up for us in terms of take profit and stop loss zones. So hope you've had a great week. Have a great weekend. I look forward to seeing you all next week.